India's Amazon equivalent 4-year-old Flipkart has apparently been valued at a whopping $1 billion. One of India's fastest growing couponing sites, Snapdeal, has snapped up $40 million, the largest single round investment among Indian internet companies. Reports suggest that private equity players have pumped in almost $230 million into the Indian internet space till March 2011. So on this very special episode of Young Turks, we ask, have Indian internet companies really come of age? Are these valuations for real, and what's changed for India's internet economy since the last bubble? Joining us to discuss all of this and more in our studios, we have with us Hitesh Oberoi, the Managing Director and CEO of InfoEdge. Hitesh is also the Chairman of the Internet and Mobile Association of India. Also with us, Rajesh Mago, Co-Founder and CEO of MakeMyTrip.com. Kunal Behel, Co-Founder and CEO of one of India's fastest growing online couponing ventures, Snapdeal.com. The website has over 8 million users, and as I just said, it's raised $40 million. This is the single largest round of private investment in an Indian internet company to date. Also with us, Alok Mittal, Managing Director at Kannan Partners. Joining us from Bangalore, Vani Kola, Managing Director of Indo-US Venture Partners. Mukesh Bansal, the co-founder and CEO of Myntra.com, an online outlet of branded apparel and accessories. Earlier this year, Myntra raised $14 million, and the website today has over 500,000 registered users. Many, many thanks for all of you to join us here this morning. Let me start by asking you, Hitesh, given the kind of valuations that we are currently seeing, given the kind of money that people like Snapdeal and Flipkart are raising, do you feel you were born a couple of years too early? And, are you looking at these valuations saying, what the hell is going on?
Well, of course, the valuations have suddenly risen in the last 1 or 2 years. But I think it's all very, very good for the Indian internet space, because the internet in India is an opportunity which is waiting to happen. We've already seen what has happened in China. We've seen what has happened in the US. The fact of the matter is that India just has 80 million users, and this number is going to go to 300, 400, 500 million.
Yeah, but I want to pick up on that. The fact of the matter is that currently we have only 80 million users. How much of the kind of craziness that we're seeing with valuations, and I'm playing devil's advocate here, is driven by the kind of frenzy that we are seeing in markets like the US, which are very different markets from India, or even markets like China, which again is a very different market from a market like India?
Well, valuations in India are still very, very low compared to what you see in China and the US, for example. And Amazon.com is valued at over $100 billion. The number one sort of travel site in China is valued at $6 billion. So Indian sites...
But it's taken them over a decade to get there.
Yes, but what people are saying is that India will get there in the next 5 years. Now, of course, there's a lot of belief and there's a lot of hope, but that's what investors are thinking.
Okay, Alok Mittal, is that what you're thinking? What is fundamentally changed in the Indian internet economy to demand this kind of valuation?
I think the hidden actor behind all this is the Indian consumer. I think the Indian consumers changed. Over the last 3 years, the Indian consumers started transacting online.
Yeah.
Many of these businesses are now transacting more than $5 million a month from 2 years back. That's the kind of growth we are seeing in October. And I think the Indian consumer is the real beneficiary of these valuations, right? All the hundreds of millions that's getting out there will be spent on educating the Indian consumer, offering high quality services and discounting, right? So I think that's kind of the hidden actor behind all this.
So you believe it's real? The valuations are for real? You don't believe this is another bubble in the making?
No, there might be a valuation bubble,
okay.
But there are fundamentals behind it which are supporting the excitement and the belief that in 5 years' time some of these companies will be big companies. Some of these companies will fail. That's the nature of venture business. I think the investors will protect themselves. The question mark for entrepreneurs will be, can they stay the course and build businesses the right way and build value for themselves, because they're the first one who get crushed by these valuations if they don't deliver.
I'll get to the entrepreneurs in just a bit, but Rajesh, I want to get your point of view on what we've just been talking about. How much of this do you believe is real?
When it comes to valuation change, what happens is that it is not. See, if you try and compare with what happened in 2000, early 2000, it was only potential which was being looked at. A couple of percentage internet penetration, the payment e-commerce infrastructure was very, very poor. It has evolved a great deal now, and which has increased consumers' confidence to transact on the internet. Fundamentally, there is now greater belief from the investors community that it is now real, in the sense that even the internet penetration, because of broadband rollout and 3G rollout, it's beginning to happen, because it was narrow band earlier.
But let me come to the entrepreneur and let me ask you, you've just managed to raise $40 million, a big achievement, congratulations on that. But are you feeling the pressure of performance now?
Not yet.
Not yet.
I'm sure the pressure will come eventually, but there's a lot of talk about high valuations, but the high valuations are actually because of companies demonstrating clear metrics, right? The valuations are forward-looking, no doubt. Any entrepreneur who says that the valuations today are not forward-looking is lying. They are forward-looking, however, they are not 5-year forward-looking. People are growing into their valuations in 6 to 12 months now.
Give me a sense, for instance, for Snapdeal, what is the kind of numbers that you have shown, and what is the kind of projection that you're making over the next 12 months? Because I do want to talk about the next 5 years, as you pointed out.
Sure, so I think within this year, we'll probably cross 150 crores in revenue, for instance. We just started 17 months ago.
Yeah.
And that kind of growth was never seen in India before, in any sector of the industry. Also, I think one fundamental thing that e-commerce is doing for consumers in India is providing them access to aspiration. So Indian consumers have a lot of aspiration across the country, across all 1,600 cities and towns of India. But brick and mortar retail has not scaled as fast as everyone wanted. And so e-commerce is providing that access to them.
Okay, Vanikola, let me come to you, because you're investing in Indian internet companies. The question that I want to ask you is the kind of money that we're seeing going towards these Indian internet companies, is it on account of the fact that we don't really have that many good scalable operations currently in India? So is this also a question of scarcity of good Indian internet companies and the kind of valuations that we're seeing as a result of that?
Is there a bubble? There is always a bubble. Is something overfunded? It's always overfunded. And that always comes from something that is fundamentally a good value proposition. 2000 bubble in US still had Amazon and Google and great companies come out, and probably many companies that went on the wayside. And the companies that you're seeing here today, these are the good companies that are getting funded, and there will be companies that probably won't make it. So by that measure, some companies will be overfunded, and hence the bubble, as you say, will be a factor. But the reason for the core of this funding is, if you look at it, you mentioned 80 million, we can call it 80, we can call it 100 million today internet users in India. That's only 8% to 10% penetration of the Indian market. And if you look at the developed world, say UK, there is only 51 million internet users, and that is a very high saturated country already, and they have over 100 billion in online e-commerce. So you can kind of extrapolate and say, what is the opportunity in India? It is huge. The value proposition of convenience, cost and discovery will make Indian consumers come online. So the question of what is the right inflection point and who are the right companies, and I think that is the holy grail. And if you are in one of those, then the returns and payout can be huge, and that's the core value proposition of a venture capitalist, to find those companies that will emerge and become the biggest winners.
All right, Mukesh, let me come to you, because you've managed to raise some money as well, but I want to talk to you about the journey that Myntra has actually taken, because what you started off with, you're a very different company now, perhaps on account of the feedback that you got from your investors saying that what you started off was too niche and now you need to become a more generic company. I want to talk to you about the balance between the entrepreneurial idea and the vision of the venture capitalist or the private equity player who's investing in your particular venture or company. How do you strike that balance?
Right, so Shireen, for our journey, right, a lot of it is actually driven by the consumers. What we realized is over 3 years, we did very well in personalization, but we also realized a very niche category. And as we started to see the e-commerce starting to take off, we realized we have built a good e-commerce infrastructure. We knew how to conduct e-commerce, but the category was holding us back. I realized, lifestyle is a much bigger category. It's $50 billion now, growing at 15-16% CAGR. So it'll be $100 billion category. So I think a lot of it is recognition by the team on the ground that there's a bigger opportunity we can go after.
Is the Indian market ready for Indian internet companies?
Now when there are so many investments and so many Indian companies,
you think they will make the route to the Lal Street as well?
Yes.
Okay, Alok Mithai, we're talking about the numbers and we're talking about the universe expanding exponentially in India and how underpenetrated we are and what it's actually going to result in. But let's talk about the kind of money these companies stand to make. We've just heard what Snapdeal is projecting in terms of numbers. But is that really the case for other Indian internet companies, or are they the exception?
See, the companies which are getting investor interest, especially later stage investor interest, easy to raise your first round of capital. Companies which are getting later stage interest are companies which are demonstrating those metrics. And I think most investors are sensitive today not just to traffic and eyeballs, which is a movie we've seen before, but to revenues.
Yeah.
I think the other interesting part is most of these companies, and we talk to a lot of those companies, with some of them in our portfolio, are not just beginning to demonstrate revenue, but they're beginning to demonstrate gross margins, right? So, those curves will meet. So the fundamentals of the business are strong. The consumers are out there. These businesses are transacting and making money. The question on valuation will always be outstanding, right? If someone pays $1 billion and makes 5 out of it, that wasn't a bubble. If someone pays $1 billion and crashed to 200, that's called a bubble. So we'll know 2 years from now whether it was a bubble or not from a valuation standpoint. But from a business fundamental standpoint, these are real businesses.
In the 1999-2000 bubble was that while everybody was talking about the numbers going up because of internet and all of that, the business model was perhaps not keeping pace with the kind of growth, or the business model didn't really make sense in the long term. Are you seeing the business models being different this time around?
Well, the business models are the same, and in some cases there is a lot of suspicion around the business model as well.
Okay.
But what is different this time? What has changed in the last 2-3 years? I think people underestimate the role of the entrepreneur.
Okay.
What has changed is that some people have made it possible. Some people have demonstrated success, and that is getting other people in, and that's getting the venture capital in.
What about the Indian market? And we're looking at people who are investing significant sums of monies into these companies now. Would obviously be looking at returns and would be looking at exit options as well. Is the Indian market ready for Indian internet companies? Do they really understand still Indian internet companies, or is it going to have to be the NASDAQ that Indian internet companies are going to have to look at?
So this was one of the biggest question or debate that we had when we wanted to go, take our company public, whether we should list in US or whether we should list in India. And we realized that the appreciation of internet business models in the investors community was far better in the US. When we interact with the institutional investors out of US, there was the understanding of the space and the quality and the outlook was very, very different.
And my understanding is that hasn't changed significantly.
It hasn't really changed significantly. But having said that, now when there are so many investments and so many Indian companies,
you think they will make the route to the Lal Street as well?
Yes,
okay.
I think that will definitely happen.
Manikola, I just want to bring up the point that Rajesh was talking about, that perhaps now we are going to see Indian companies taking the Indian capital market route as opposed to exploring the possibility of listing abroad. And also, since you guys are investing significant amounts of money into these Indian companies, what are the kind of exit options that private equity or venture capital is looking at, and what is the kind of return period that you're giving these entrepreneurs?
I think that most of these companies, the model that we look is they are very, very high risk. They're going after some emerging themes and business models that are unproven. And we know that when we invest money, we have a very high probability in some companies that we will lose it. We don't know which ones when we invest. But the ones that kind of crack the code and get to the right metrics, as some of the companies already have that are here, then they have a very high probability of returning us greater than 10x return. So that's what makes this model.
But how patient are you willing to be, Vani?
No, we typically invest 5 to 7 years at a minimum, and some of the companies can even take 8 to 9 years to realize that kind of a value.
Yeah.
And that's okay, because we are typically the first institutional investors, so we know that at the time we come in, there's a lot of chaos still. The business models are not clear, the profitability models are not clear, the management team is not yet fully gelled. So that takes a minimum 5 to 7 years to give us an exit.
Mukesh, I want to ask you, what are you guys doing with this money? I can see a lot of your advertisements are now running on practically every television channel. What are you using this money for, and is this really a good time to go out there and be advertising?
Yeah, so Srini, there are 3 basic areas. The biggest expense is actually building the technology platform, which is the core of delivering the customer experience. So second, the building of the supply chain warehouse, so a lot of investment is going to that. Television actually is turning out to be a relatively cheap medium for us. The returns are great, the brand awareness, the kind of traffic and revenue jump we have seen in just over 10 days of advertisement is superb. So at the moment we feel that we can get better returns from television than we see from online advertisement.
As you see more and more companies actually getting into the space that you operate in, what is Myntra going to do in order to differentiate? Because that is going to be a problem for a lot of you guys out there. How do you differentiate? Because there's going to be several Me Too players.
The reason that so many companies come into this space is lifestyle side. It's a $50 billion market and there's a huge gap in the market today. How we differentiate ourselves? Primarily the service, and which requires, as I said, a lot of investment, various fundamentals. Then the brand will play a big differentiator.
Kunal, how are you addressing this challenge? Because it clearly is going to be a challenge for every single entrepreneur like yourself.
I think scale in India and e-commerce especially proves to be a key strategic asset. So if you can quickly build up scale, so we have 500 people now, we have operations in 50 cities, people on the ground, 250 sales guys on the ground. It's hard to replicate things like those.
Okay.
As a result, being the breakout company in a category very quickly is absolutely of paramount importance.
Okay, what are you doing with the 40 million that you've raised?
We're thinking about it.
Still thinking about it. What did you raise the money for? You probably did have a plan in place. I'm hoping you did have a plan in place.
We did have a plan.
So what are you going to do with it?
I think so. We look at three primary areas of investment for the company. We'll continue to go broader and deeper geographically. So deeper in cities, and we are in 50. We'll go to 100 cities. We launched a product deals business about 3 months ago. That's doubling month on month.
Okay.
So we're going to keep growing that.
Are you going to be looking at acquisitions? Because some of the companies in the space, when they raise money, they did look at acquisitions. For instance, Flipkart did do one.
We'll be opportunistic about it, both in India and outside India.
Okay.
But we are not necessarily committed to making acquisitions. Whatever makes sense for the company.